Hi, this is Dustin with Dustin's Dollars. Today I'm going to be talking about Bitcoin. We're talking about how I value it. We're going to do a little bit of very light math to sort of cover that. Talk about the impact of the Bitcoin ETFs that were approved this year, what we've seen so far, and what that might mean in the future. And then we're also going to talk about the Bitcoin halving that is coming up in about 3 weeks. Before I begin, let me remind you that I'm not a financial advisor or a financial professional of any sort. All opinions I express in this video are mine and do not represent those of any company or any other individual. I currently hold a long position in Bitcoin, so this video should be for your entertainment purposes only because I can be wrong about everything I say in this video. You need to do your own research before making any investment decisions. All right, so Bitcoin, I'm going to start off and just give you my base assumption here and what I think is true for most people who are valuing Bitcoin, and that's the base assumption that Bitcoin is a store of value. And, simply put, that just means people who want to maintain their purchasing power over a long period of time, they can purchase Bitcoin, and in the future, they will be able to convert that Bitcoin into whatever it is that they want to purchase, whether that's, a house or food or anything to that effect, that the conversion rates, that's the effective, that is the reason why people are buying. And the mechanism or the framework that I use to value Bitcoin then is how much value will people store in Bitcoin? And I use that framework because I've done a prior video on this almost a year ago, so I'll very quickly recap. I think that is the most widely adopted narrative or story as to what gives Bitcoin value. Bitcoin itself does not have intrinsic value in the same way that you could say, you can't convert it directly into US dollars for any, inherent property, right? The US government has bonds, those have a US dollar value, at the end of their lifetime. You have other assets, you could talk about a stock option where there's an actual underlying asset that you can redeem your stock option for that thing, for that, the shares of that company. But Bitcoin itself has value, but not necessarily intrinsic value. But I think because of the narrative of it being a store of value, and if people want to store value in Bitcoin, then it is given value by virtue of that. That's the same reason why Bitcoin has value, but maybe some, if I copied all the Bitcoin code and started running my own blockchain and said, hey, I have, clone Bitcoin or whatever I want to call it, that has no value because no one wants to store value in it. So that's like the base framework that I use. And again, it gets me to the question, in order to then value Bitcoin overall, the totality of all 21 million Bitcoins, I have to ask and answer the question, how much value do people want to store in Bitcoin? And this, the crazy returns to date that we have seen, I think, have been adoption of people adopting that narrative and understanding it and purchasing Bitcoin and storing their value there. And again, I think people are doing this partially because I saw Bitcoin went up in the past in terms of its price, and so they thought it was going to be worth more for them when they bought it. And to some degree that is also that goes along with it, right? And that is a form of storing value, right? You want to have more value in the future for the money that you have right now. But one of the point that I want to underscore with that is those people were adopting it for one purpose or another. I think, again, the framework that I look at is, in the long term, people will the long-term use of Bitcoin will be because of this storing of value, and that really will come the long term. We've sort of reached the saturation point for how many people want to store value in Bitcoin, or the alternatively said, the maximum amount of value that is stored in Bitcoin. That we will grow from here to there because of adoption of Bitcoin. And this is a nuanced position, but Bitcoin itself does not have to do anything. We don't need to upgrade the network. We don't need to do any additional changes to extend features of Bitcoin. It already exists and already works as a store of value. And I think there's some nuance to that. We could have a very long discussion, debate about that, but I'm not going to cover that in this video. I'm just setting the stage for all the rest of what I'm going to talk about with that as the starting assumptions. Now, let's shift gears just a bit and talk about the ETFs. And the biggest thing that the ETFs did, and I guess I could pull up the the Bitcoin chart for you here, just to sort of underscore this. They made adopting Bitcoin significantly easier. So if we go back, let's look at, a year. Of course, you've probably seen this before. The ETFs were approved sometime in January here, I think, and then you saw this spike up, and clearly Bitcoin it went significantly up, and who knows if it will go up or down from here, but it certainly looks like the trend is to continue going up from this point. It hasn't necessarily stopped so far. And that all got really kicked off in earnest when the ETFs started. And clearly went up even before that. I think a lot of this in October timeframe, November, a lot of that was even speculation of people wanting to front run the ETF approval, people expecting it to be approved, and so people were bidding up the price even at that time. But it's pretty clear that just whatever front running happened was not enough. It was not commensurate to how much interest and adoption happened post approval of the ETF. So at least that's what things look like so far. Maybe it'll drop by 80% tomorrow and I'll look like a fool, but that is, I think my interpretation of this data. And what made the ETFs, why did they have this impact? I think there's a couple pretty big pieces to this. Number one is we just didn't have the same access for people from just a normal brokerage account to Bitcoin before, right? You could say GBTC or the Grayscale Bitcoin Trust did exist, but that was kind of I don't know if it was technically a closed-end fund, but I think that's the correct classification of it. Basically, you couldn't create or destroy shares of GBTC just because there was more or less demand for that particular fund. It was a closed fund, and that's why you actually saw a significant either premium or discount, depending on when you're looking at it, in the price of GBTC versus the value of the underlying Bitcoin that trust held. And the ETFs are different, where they can actually create more shares. If people want to buy the ETFs, they will go out and purchase the Bitcoin, the actual physical Bitcoin, and then create more shares that matches up with that new physical Bitcoin that the ETF purchased. And similarly, if people sell a bunch of shares of the ETF, they can actually then say, okay, great, I don't need as many shares. I will destroy some of the shares of the ETF and then also sell that underlying Bitcoin that I had that were underlying those shares that were just destroyed. And so that makes the ETFs kind of elastic, is the way that I think about it. And that's much better for a store of value, right? Because as more people want to store value there, they can create more shares, capture, grab more of the Bitcoin, and actually expand to actually be in proportion to the value that is stored there. I mean, just another thing to note is that the fees on GBTC were relatively high, right? I think it was 2% per year, and the fees on a lot of the ETFs are a 0.25% per year, more in line with what you'd expect to see for a lot of index fund type ETFs. And so I think that's a big deal. Another huge problem that the ETF solved was the custody problem. And I think this is best illustrated by, you look at like FTX, right? People held Bitcoin on FTX, but when it actually came to the point where FTX went bankrupt, you realize that FTX did not actually have your Bitcoin if you were holding Bitcoin there on FTX. And there's a whole bunch of court processes that are going through now, and even if people are paid out, it looks like they're being paid out at they're not given back the same amount of Bitcoin that they had. Let's just put it that way. And ETFs, on the other hand, do actually address this custody issue where there's a lot of existing. I think the distinction here is that there is a lot of existing law and precedent and processes for handling shares of an ETF in a way that they already do this for all kinds of ETFs today. Bitcoin ETF is not special in that manner, and so that's very easy. It also makes it easier for people who maybe aren't institutions and don't have aren't worried about those kinds of risks, but also you have the issue of, what if I want to purchase this and then I'm worried about if I die tomorrow, if I'm hit by a bus, are my wife and my kids going to be able to actually benefit from the Bitcoin that I purchased, right? Now, if I just have Bitcoin, I have it in my own cold storage wallet, what does that mean? Are my kids able to get that? Like, it gets hard to actually figure out, how do I distribute this in a will or in an inheritance. But if you have shares in an ETF, that's already handled the same way you would handle any other stock holding that you have. So I think that was another big problem that the ETF solved, that in all honesty, was potentially a barrier for some people when they looked into the details of, okay, if I want to purchase Bitcoin, how do I do it? How do I secure it? All those things. What does it mean? If I pass away, how do I plan for the next generation? I think that is something that ETFs make very easy. Everybody already knows how that works. In a way that just Bitcoin itself. You want to go out and buy Bitcoin on Coinbase. That was hard. That was hard to actually manage that, and so that's another thing. The ETFs also add scalability here. And this is a bit of a technical thing, but the Bitcoin network itself, I think, is limited to roughly, I think, 10 transactions per second, if I recall. And that is significantly, you can argue whether that's enough or not enough, depending on a whole bunch of different factors. It's a very complex discussion. But the point is, if a whole bunch of people want to every day buy some more Bitcoin, if 1 billion people every day want to put $5 into Bitcoin, then Bitcoin itself does not have the scalability to be able to do that. The ETFs are already set up to do this. So the ETFs are creating this custodial relationship where lots of people are buying shares of the ETF. The ETF makes one large block purchase, one large transaction that pulls the Bitcoin into their custody. And so I think that scalability is a problem that a lot of people don't think about, but it is one that the ETFs help alleviate. I think there's also some legislative risk that folks were worried about, where once this ETF, the Bitcoin ETFs were approved by the SEC, to some degree this is condoned by the government in a way that just Bitcoin itself was always in this gray area. It wasn't really clear that the government was not going to come along and just ban Bitcoin, but it's a little bit harder to see where the government, after giving explicit approval to these ETFs, to BlackRock ETF and etc., that the government would come in now and actually ban Bitcoin. It seems like there's a bit of momentum and a bit of not implicit, even explicit approval of granting and allowing this to happen. And so I think that was one thing that a lot of people really viewed as a risk, and they it's not that it is impossible for it to happen now, but I think it's a lot less likely now that there's actual traditional financial companies that are invested in this and are stakeholders, and that there's already been some amount of government review that has gone through. And so I think that significant reduction of risk was actually, kind of gave the green light that these ETFs are okay to buy, right? And some people might even still think that Bitcoin itself, maybe holding physical Bitcoin is in a slightly more of a gray area, and maybe not for individuals, but maybe for certain institutions. What if a college who has an endowment wants to purchase some Bitcoin? Purchasing, holding the actual physical Bitcoin may be a little bit more of a gray area for them versus purchasing shares in an ETF that has been, explicitly approved by the government. Those are two sort of levels of risk, and the ETFs are the lower risk asset for them. It also, a couple of things I will mention. I think the ETFs also helped with, just the logistics of how do I actually transact with this? How do I actually, open an account, buy it, sell it, manage the, if there's somebody who's actually trying to trade it actively, how do I look at the order book and all these sorts of things. I think there's a lot of, what I want to say, infrastructure that is already set up for anything, for ETFs that is not, that these sorts of institutions would have to they have to build brand new just for Bitcoin or for crypto stuff that they wouldn't have to do now that it is just traded as an ETF. And so, kind of one other last bit is it also generated a lot of news and exposure for Bitcoin. I mean, that was just positive for adoption, because it gained more exposure, and all of that kind of comes together. And that's why I sort of view the overarching impact of the ETFs is that adoption just got significantly easier. And now that bringing it all the way back to, how much value is going to be stored in Bitcoin. Well, making it easier to adopt, clearly more people adopted it. And so more people decided to store some value in Bitcoin. That is the way I interpret this. That is the way that I think the ETFs, have impacted things now. And, as I said, I'm looking into the future of what, I don't think we've seen the full impact of the ETF, approval actually, playing out, because I think it takes time. It's not like everybody in the world was fully up to speed on Bitcoin, was just waiting for the ETFs to be, approved And now all of a sudden, at the end of January, beginning of February, we're all going to just pour the money into Bitcoin. It's going to be the one-time thing, and now we're done. And we've seen the impact of the ETFs. This is going to be something that's going to play out over a long period of time, and because people adopt it, and again, people, if they are adopting it as a store of value, as they have more value to store, are going to store more there. And I think maybe that sounds like a bit of a self-fulfilling statement or a circular statement, but I think the point here is, let's say I'm let's use me, right? I'm a 30-something person, in the United States. I'm still working. I'm not retired yet. Every, paycheck, hopefully, I make more money than what I actually need to spend, and so I've got some additional money. That's additional value that I want to store, right? Someday I do want to retire, but between now and then, I have to figure out what do I do with all this excess money so that sooner or later I have enough, money or value. Let's be slightly more general, more value stored, than what I'm going to need for the rest of my life, and now I can actually retire. And people have to choose, what do they do with that, right? Are they going to put it in, are they just going to hold it in cash and put it under their mattress, put it in a savings account, put it in treasury bonds, put it in stocks, buy index funds or buy specific companies. Now you also have Bitcoin, right? And so over time, people are still going to be putting more money in there. And I think it's going to be, for a lot of people, sort of a switch where they say, okay, now I'm going to start putting a portion of my money in Bitcoin. Maybe that's 1%, maybe it's 2%. And I have a couple numbers, some calculations we'll go through in just a minute. But I think this is something, this is going to be true, I believe, for individuals and institutions, right? I think they're going to start small. They're not going to put all the money that they would ever want to put in Bitcoin into it at their first transaction, right? You're going to see this play out over time. And that's what we've seen. That's what I think we've seen so far, where, and maybe I could zoom in so this chart makes a little more, makes a little more sense. And I go to just the 6 months, right? ETF approval is somewhere around here, I think, January, February. I don't recall the exact date. But it's continued to kind of trend upwards. And I again, think my theory is that it is going to continue to trend upwards as more and more people start to put in a little bit more. It's a bit of a self-fulfilling prophecy where more people buy Bitcoin price goes up, and that sort of spurs more people to say, you know what, that actually worked out well. Let me put a little bit more in. And I do think there's a terminal value. I'm going to get to that, in good time. But I think that's how it really plays out. Sort of, there's a calculation I have for, like, what do I think is the final value of Bitcoin? But everything I'm talking about here is, how do we get from here to there, right? Why does it actually get to that number, rather than just, if I say it, let's say hypothetically, because I will get to this point, to say Bitcoin should be worth roughly, 5 to 10 million per Bitcoin long term. Why don't we just get there tomorrow? Why is it not already worth that amount? And the real reason is because it takes time to build up to that, right? People have to actually, if it's a store of value, we have to store more and more value, and that's not going to all happen immediately, just because, not everybody is going to do it all at once. Hi, DEFCON 2. Thanks for hopping on. It says, great topic. Thanks for covering it. And you are absolutely welcome. Hope you enjoy it. Yeah, I feel fairly passionate about it. I try not to talk about it too much on the channel because, a lot of it would just be me repeating myself. Because really the thesis hasn't changed for a long time. Once you get it, you kind of get it. At least that's been my experience. But just wanted to, cover it again because there's a little bit of, newness and a little bit of, current events with the halving coming up. So anyways, that was a lot about, sort of the ETFs and getting into what I mentioned. Another one of these, I said that the ETFs make it easier to adopt, but then you kind of go peel back the onion further and say, why do people want to adopt? They want to store a value. But one of the reasons, for institutions specifically, I want to go into, because, a lot of, I think, what we've seen in the past has been institutions have not gotten into it yet for one reason or another. And I think the ETFs actually solved, checked off a couple of boxes, made it accessible for institutions to adopt. And now they can. Right now the question is, should they? And for answering the should they adopt Bitcoin, should they put some money into Bitcoin, this, right here, this is a white paper from ARK Invest that's a couple years old at this point, but I think all the points here remain. And this is talking about how does Bitcoin correlate to other asset classes, right? And they have these charts here between the S&P 500, gold, bonds, etc., right? Real estate. And all these charts here are showing you kind of the histogram of, I think they're monthly returns, I want to say 90 day returns of the correlation between Bitcoin and these asset classes, right? And when you see these distributions where there's, they're kind of all over the board, from, negative correlations to positive correlations, and that's true for most of these asset classes. The takeaway from this is that Bitcoin was not strongly correlated to any of them. And that's a good thing for institutional money managers, because they say, hey, here's a new asset class that I can hold, that I can trade, and I can have this asset class as something that's new and different than the other things that I hold. And now, because it's not correlated to all these other asset classes that I hold, I can actually manage my money in a way such that, because it's not correlated, sometimes Bitcoin is going to go up and my other things are going to go down, and I can rebalance and sell some Bitcoin and buy some of the others, or vice versa. I can sell some of the other things and buy some Bitcoin. And this will actually smooth out my overall volatility, because these are uncorrelated assets. But over time, because all of these assets trend upwards, that I'm going to smooth out my volatility, but still get, positive returns, and potentially even better returns over time. Because if these are truly uncorrelated, then, by selling when one of them is high and the other one is down, I'm going to actually generate more positive returns while I'm also lowering my volatility. And this may be unfamiliar to you. I've done a fair bit of reading, and they have a bunch of charts even down here talking about, where does Bitcoin fall in with a portfolio under sort of modern portfolio theory. We talk about the efficient frontier. These are a lot of things you can go look up and do the research yourself. But the takeaway from this is they're saying, I can take more risk and get more return, but having Bitcoin as an asset lets me sort of shift the curve in a way that's advantageous. And again, it'll be too much. You have to read this paper yourself to really get into it. But they're talking about this in terms of, I guess it's too much for me to really talk about here, because it would, you have to just read their paper. I'd be talking just going through all of it, because it's very dense here. But the point is, by including Bitcoin in a portfolio, that you can actually get more risk-adjusted return, right? And that's kind of what I was getting at before when I talked about the you can get this because it is uncorrelated, right? Getting back to these charts, because you can see that Bitcoin was not correlated. There was some times where it was positively correlated, sometimes where it was negatively correlated, but none of them are particularly strong. They kind of center around zero, which is basically no correlation. And because it has that property, this is very, very interesting to institutional money managers. And I wanted to kind of now go back and try to talk about the question I'm trying to answer of how much value do people want to store, right? In order to actually take advantage of this, these institutions have to have some position in Bitcoin, because if you have no position in Bitcoin, clearly you're not getting any, if you've never buy it, you're not getting any value out of it in terms of, managing your portfolio. And so I looked at just a little bit, so bear with me, how much money is out there. And I just got a couple data points here. These are, not at all exhaustive. I just want to get an order of magnitude here to think about it. So, because the first thing I thought about was, college endowments, and I found Wikipedia, hopefully it's accurate, and they said, as of 2023, the total endowment market of the U.S. institutions was about $839 billion. So, let's just round it off, $840 billion. Also talk about sovereign wealth funds, right? And this actually is much larger. These are, mostly, countries that have their own wealth fund. Think about like Saudi Arabia or something like that. They hold assets, and their goal is to say, hey, we want these assets to grow over time. And sovereign wealth funds over the entire globe own about $11.5 trillion in assets. So clearly much, much larger than college endowments. Another thing you talk about was corporate treasuries. I know there are some companies out there. I think the largest, say like Apple has, I don't know, over $100 billion in their corporate treasury. I think that's true for a lot of something close to that for a couple of large tech companies, and obviously goes down from there in terms of many other companies have a lot less than $100 billion of cash. But, in total, maybe you could figure there's $1 trillion or $2 trillion just in corporate treasuries. Now we have pension funds, and I looked this up, and this one says from this, I don't know what this is, WTW. It was one of the top results on Google, so hopefully it's at least in the ballpark of being accurate. And they said that there was about $20.6 trillion in pension funds, and this was at the end of 2022, so presumably it's even higher now. Add all that up, you're looking at, let's say, $35 trillion from kind of just institutions they looked at here. None of these are necessarily even Wall Street, hedge funds, those sorts of institutions. They probably also have trillions of dollars. I have no idea how much. But if we're looking at this, I think this directly accounts for about $30 trillion. I also found one that talked about just high net worth individuals. I think these are not the people who traditionally are probably, purchasing Bitcoin as it was sort of an emerging asset class. Maybe they hadn't even heard about it. The past couple of years has gotten more popular. Maybe they've heard about it, but maybe they didn't put a lot of money into it. They didn't really spend the time to understand it. And but they look at the combined wealth of them. That's $27 trillion between the ultra high net worth individuals in the world. So that's let's just round it off to round numbers here. About another $30 trillion. So maybe $30 trillion of institutional money that we can easily identify. $30 trillion of high net worth individuals' money that we can see. There's probably even more institutions that, as I said, are money managers. But let me just do some quick math off of that $60 trillion number. And so the question here is, let's say those folks who control $60 trillion, let's assume most of them just don't have any Bitcoin position. So it's effectively 0% right now. What if they want to put 1%, a 1% allocation into Bitcoin, right? So that is going to end up being $600 billion. Bitcoin right now is valued at $1.4 trillion. That's about right where it's at right now. I guess I could look at, what does Yahoo Finance say? Give me 1.396 trillion. Let's just call it 1.4 trillion. So they talk about wanting to buy 600 billion. So, sorry, get my calculator up. 600 billion over, let's call it 1.4 trillion. That would be about 43% of the current market cap of Bitcoin. So if they wanted to just put 1% in, they'd have to purchase 43% of the Bitcoin that exists today. That is humongous. And, if you think about that, that's if they wanted to purchase it at the current prices. And I think the implication here is they wouldn't be able to, right? As soon as they started buying even a fraction, even if they put in, $6 billion, right? 1% of 1% of their total, current assets. They purchase 1% of what they even want to buy of that whole 600 billion, that would probably push the price up, right? And that is going to continue as they put more and more money in. And so I did a hypothetical, and let's say even if overnight Bitcoin doubled to $140,000, they'd have to convince 22%. It would drop it from 43% to 22%. Again, round it off. 22% of the existing holders of Bitcoin to sell out all their Bitcoin in order to let them purchase, to put a $600 billion allocation into Bitcoin, which would represent just 1% of those funds' current value. If Bitcoin quadrupled to 280,000, they still have to convince 11% of the current holders to sell, right? And so these numbers are a little bit, maybe you think it's absurd that I think people wouldn't be selling if it jumps to 80K or 90K, but I don't think that they would. I think a lot of people purchase Bitcoin expecting it to be worth significantly more than it is today. And a lot of people have purchased this in the, they didn't all buy it at 15,000 or 1,000. They haven't been holding it for 5 years or 10 years. A lot of people have purchased Bitcoin at 30,000, 40,000, and they didn't buy it just for a quick double. They see the value. They see that Bitcoin could be worth 10 times as much in the future. They're holding for $500,000 per Bitcoin, right? Or some other number. And I think there's quite a few people who are in that boat. And so I don't think it's too far-fetched to think that 11% of people you'd find an equilibrium to find about 11% of the Bitcoin that's being held today would turn over if Bitcoin went up to into the 200,000s. It's really hard to say, right? But I think the overall point is that's what would happen if all these funds want to put a 1% allocation to Bitcoin. What happens if that's 2% or 5%, right? I don't think those numbers are ridiculous when we're talking about a brand new asset class that, again, going back to these correlations, is uncorrelated to everything else. Also combined with the fact that it's been the best performing asset over the past year, 2 years, 5 years, 10 years. I mean, maybe I'm wrong on every single one of those time frames, but I think in general it's performed phenomenally. right? And people see that, and people like to make money. And as they really get into it and they buy into this, they do their research and they say, hey, this could be a store of value. This could be worth, X amount, and they make their own judgment and they say it's not up to X amount quite yet, so it's worth purchasing right now. And getting, sort of closing the gap on this, I also mentioned the halving. That's another source right now where people are selling, right? Because Bitcoin miners have expenses and they have to fund those expenses somehow. And they basically have two ways that they can fund their expenses. One, they have to effectively have US dollars to pay electricity and all their people and all those sorts of things, and they get income from mining Bitcoin. That is their income. Now they can either sell that Bitcoin and get dollars to be able to pay things, or they can effectively dilute shareholders if they're a publicly traded company, and publicly traded companies, Bitcoin miners do tend to do that a fair bit, but overall they're selling some of their Bitcoin. They can't avoid doing that forever, and the amount of Bitcoin that they have to sell, of course, comes from how much did they get from mining Bitcoin. And as the Bitcoin, halving is going to happen in about 3 weeks. I think it's projected to happen. Close this ad. There we go. Projected to happen in about 3 weeks on, I think, April 20th. This is just a website I found. I'm not affiliated with it, but I found it. And the net impact of this is going to be that those miners are going to get less rewards, and that means short-term, long-term. Short-term, they may not be selling all their Bitcoin. I actually look at the monthly reports from a lot of Bitcoin miners, and recently they've been holding on to their Bitcoin. They haven't been selling very much, if any, of their Bitcoin, over a month or two time frame. But they're going to have to sooner or later. And the amount of Bitcoin that they can sell is limited by what they actually get from doing this mining, because they're going to get less. As of April 20th, they're going to start receiving less rewards per block. There's just going to be less of that Bitcoin that has to be sold to pay for miners' expenses. And that, again, is one more source where, you sort of see there's less people selling Bitcoin. And so it's not ridiculous as people want to actually purchase more to increase their allocation up to 1% or up to 2%. There is less Bitcoin available for them to purchase, which means the price is going to have to go up. So that is, the impact of the halving. And then we get to, what is the long-term, how much value do people want to store in the end for Bitcoin? And I think I alluded to it, where I think there's a terminal valuation somewhere around $5 to $10 million per Bitcoin. This would capture somewhere around, 10 to 20% of, global wealth. That would represent, about $210 trillion for the market cap, right? If you use the full 21 million that's eventually going to be mined, that is, as I said, about 10, depending on where you look. I can't get a good number on how much money is out there in the entire world between everything, but I've seen some numbers as high as, over, a quadrillion dollars, somewhere. I found one statistic that seemed credible, around 1.5 quadrillion, right? And so 10% of that would be 150 trillion. That would, I think, put you, at somewhere around $7.5 million per Bitcoin. Maybe the global total wealth is less. Maybe it's only half a quadrillion, aka $500 trillion. If you went to, 10% of global wealth being stored in Bitcoin, that would be, $50 trillion. That would put you at what? Well, off the top of my head, I think it would be about $4 million per Bitcoin. Somewhere in that vicinity, I think, is the terminal valuation. It's a little bit hard to really think that more than 10 to 20% of the world's wealth is going to be stored in Bitcoin. That would be a very interesting future if most of it was stored there, because I think other things will still have value. Companies, stocks, and bonds and real estate. All of that is still useful. But on the flip side, there's a lot of, and Michael Saylor has the absolute best explanations on this, but all those assets are worth more than their kind of intrinsic value, because to some degree they themselves are used as a store of value. And Bitcoin is, for people who want, that extra premium that they get because of being a store of value, likely is going to flow largely into Bitcoin. And so how much of those other assets, how much of their value is because of just this extra monetary premium and people wanting to store wealth in those assets? I think there's a non-trivial amount. I think it's not unreasonable to think that's 10%. And 10% global wealth seems like a decent estimation of the final valuation for Bitcoin. And again, that puts you somewhere in the $5 to $10 million per Bitcoin range. And so everything I talked about with the ETFs and individuals, behavior, I think really just explains how we get from here to there. So that's kind of that's basically all my thoughts, everything I talked about. I see there's some comments, questions from DEFCON 2. I'm going to go through those. And if there's anybody else on the stream, feel free to add some comments, questions down below. All right. DEFCON 2 says, what do you think about everything being tokenized? So I'm not a huge fan of that in terms of the actual utility, right? And I think there's, in my opinion, and this is partially influenced by, myself being a computer scientist and partially just thinking through the practicalities of, things being tokenized. I think there's clearly pros and cons, right? I'll go through the pros and then I'll go through the cons, I guess. The things I think is positive about that would be making a market out of anything, right? Making a market out of real estate, out of one individual house, right? One rental house you could do, or one Airbnb. The issue is, I think those sorts of things, or like it's really hard to. You can do the tokenization efficiently, but then somebody has to manage it. I think lots of times, and maybe there are certain assets that lend themselves, to software also being able to handle the management aspects and do that with very little overhead. And maybe those things, tokenization, will work out well. But I think a lot of the things that I hear about, we're going to tokenize, houses, we're going to tokenize everything else, and we'll use the blockchain as our record. Like the real value for blockchains is, I think, largely, I want to decentralize something. And I don't know that tokenization really, for most assets, I don't know that the decentralization adds value or is even necessary, right? For Bitcoin, that's the one clear use case where being decentralized is good, because now you have, uncensorability, and you have, stability in your, things like how many Bitcoin are there going to be, how does Bitcoin work, the actual network itself, the nuts and bolts, and that decentralization, and who can create more Bitcoin, meaning like really you have to mine it, and that's the only way you can do it. That I think is very powerful for the decentralization. For many, many other applications, putting them on a blockchain and, tokenizing them is just not efficient, right? Like something, all the mining that happens behind, Bitcoin in order to secure it is really, really huge. I mean, I think it's possible there would be some. I could see there being some derivatives of Bitcoin itself that could be tokenized, like maybe, I don't know, something like Bitcoin block space itself. If we could, have that split off and trade in some way to roll that up and redeem for Bitcoin. I don't know. It's not a very fully formed thought. I could see something like that, but it's really hard for me to see a lot of the, people say we want to tokenize everything as it being really I'm not sure that there's utility in that. Blockchains and tokenization let me just put blockchains, right? That tends to be, an inefficient database. And I think at the benefit of being decentralized, and for Bitcoin, that's good. And for pretty much everything else, I think that's not good. It's not the right trade-off to make. The actual act of tokenization, of taking some whole and breaking it up into smaller chunks, could be useful. But again, as I mentioned up front, I think there's a lot of logistical aspects with management. And when you introduce management, if somebody has to actually manage that thing and make sure that it's, administered properly, you're still centralizing the power with that person or giving them a lot of responsibility. And so maybe the tokenization could have a little benefit by making, a market out of those small chunks of that thing. But overall, I don't know if that would be positive. Sorry. I don't know if that's a good answer or anything. That's just sort of my top of mind thoughts on that. Alice can play a big role in that. Alice is a sidechain created by N0. Interesting. And so that's the marathon sidechain stuff, right? yeah, I did just the research that I did during that marathon video, and I haven't spent any more time. Haven't spent any more time looking into that. I think, you know, it is pretty interesting to think about, the stuff that we don't know, right? Because I'll even say, before I did my research on Bitcoin itself, I'd heard about Bitcoin for years, for an embarrassingly long amount of time, to where I ought to be retired at this point. If I'd even put in $100, but I think, it's not obvious to me what the individual value of that could be. So let me put it this way. As I said, I think there's, if there are certain things that where tokenization doesn't suffer from that administration problem, there are benefits from that, right? And so I think maybe this is maybe it's a place where, they're creating infrastructure and they're saying, hey, if we build it, somebody might have a great idea and come, right? It's similar to, 15 years ago, hopefully roughly around that time frame, they created the iPhone and they created the App Store and they made, software development kits for developers and said, go make whatever you can make, right? And I don't think Apple ever expected people, to create Uber, but they did, and that's something that really couldn't have existed without, something like the iPhone or something like, a mobile phone, but they didn't really see it. And so I'm clearly in that place right now where I can see where the technology is interesting, where there are potential benefits to it. I can't right now conceive of something that would be better with tokenization, that could actually use those benefits without having additional negatives that come along with that. But, I certainly have no idea what other people will come up with. And so, maybe a year from now it will be obvious what things make sense to tokenize, and there's a massive benefit from that. So I think it's very interesting that they've, it's interesting to build the infrastructure, right? And I don't think we should not build the infrastructure because we don't know how we would use it quite yet when it's, feasible to do. That's maybe my, probably sounds like a wishy-washy answer, but those are my thoughts right now. And so maybe I would summarize by saying, I don't currently know what would benefit from that in a way that's a net positive, but there could be benefits to that. And if there is something that fits that model, could end up being a very, very big thing. I don't know. So understood, too early to tell if it will work or not. Yeah. So that's kind of my thoughts on it. I think I even forgot to go over my chart that I was going to go over that talked about not my chart, but the one that talked about the increase in holdings from the ETFs. Just the proof of the adoption really is proof of the adoption via the ETFs, right? To say that they are actually holding more Bitcoin than, even GBTC when they started, to the tune of about 210,000 Bitcoin, so about 1% of the Bitcoin holdings. Anyways, not my chart. This came from another website. I just wanted to realize I saw this tab up. So, all right, that is everything that I really had to go over. I don't know if you have anything else, DEFCON 2. If not, I think I'm going to hop off. For anybody who's watching this, obviously DEFCON or DEFCON 2, or anybody who's watching this after the fact, usually do streams on Sundays. I think next Sunday I probably will not be able to do a stream because I'll probably be traveling. But that's my general hope. I am on X or Twitter, and I post occasionally on there. I've kind of scaled that back. I don't really like Twitter that much, but I will at least try to announce on Sundays when I'm going to be on here, at least to the degree that I can. And you can always reach out to me on there if you're interested. So, all right, DEFCON says no. That's all. Thanks. Absolutely. Hope you enjoyed it. It was good to have some back and forth here. Really appreciate that. And I will hop off. Thank you. Have a good one.